Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? Wouldn't you love to have this? A life-size Silver Surfer statue made of silver. Wouldn't you love to have it? We definitely need a silver hero. There's no doubt about it. A lot of people recently have been asking me a lot of questions about gold and silver and what's going on. You can clearly see that this administration is doing everything they can to hold down a lot of assets. And the assets that they're holding back are those that give you an indication of where the economy is. So let's get into an article here that was put out by John Adams that I think is interesting and makes a great point. Before we get started, hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. If you're thinking about buying gold and silver, go to our friends over at Money Metals Exchange. The link is down below in the description. If you're a first-time buyer and you spend more than $100, use promo code Pimpy, P-I-M-P-Y, and you'll get a free half ounce of silver. So there is a lot of manipulation within the gold and silver markets, which is fine and dandy, but there's so much pressure being pushed on the markets. It's getting to the point where they can't do this any longer, and there's a lot of people who are recognizing this. Now, you can sit there and say, oh, they could continue to do this. There's nothing you could do, nothing we could change, nothing we could do to change it. Cryptocurrencies are not the answer. They're being exposed every single day as one of the worst Ponzi schemes ever. Ever. People are after the blockchain technology, not to deal with the cryptocurrencies. Exchanges everywhere. People are being exposed. People are going to jail. People are going to court. You can say what you want, but we already know that cryptocurrencies are not a safe haven. Don't get me wrong, if there's an opportunity to make money off it, then by all means jump on it. But you notice how they're stagnant. They haven't done anything. They're not going anywhere. You could call that accumulation. Maybe we are at an accumulation stage. If that's the case, then you should be buying up a storm of these while they're cheap and waiting for them to go up, if that's what you're hoping for. But I can't help but feel that cryptocurrencies are just an indoctrination to get everybody interested in a central bank digital currency. That's why there's so many of these stories linked to the central bank digital currency. It'll go, this company's committing fraud. Wait till the central bank digital currency comes out to avoid this. We need regulatory control. Wait till the central bank digital currency comes out. It's almost as if they purposely set this up. Now, there is tons of evidence that show us that the CIA are the true inventors of cryptocurrencies. I got evidence of that galore. I have to do a video about that later on. Cryptocurrencies could be used twofold here. One is to keep you from investing into precious metals like you should, and the other one is to indoctrinate you so that you're used to a digital currency. So when they force you to convert over to the central bank digital coin, you're already there. So word has got out, and there's a memo that was leaked, that our government has no plans on allowing silver to get above $30. That is their goal. That is the cap. They actually put a cap on silver, which is illegal, by the way. And that's why you see it lingering around where it is. And you're going to see in John Adams' article here what's going on with that. There's also a cap on gold. And the reason for these caps, again, is they don't want people to start seeing the prices of gold and silver and other commodities go up in value. That's an indication that there's a weak or failing economy, and we're close to midterms. And the powers that be want to stay in power so they can continue to force us into this great reset. So here you are. Here's John Adams. Chris Marcus covered this briefly real quick, but this article is good. John Adams became famous when he started exposing the fact that the Perth Mint was lying and they didn't have the silver that they claimed to have, and put a lot of pressure on these people and expose them for the frauds that they were. So a shout out to John Adams, but this is his article that he wrote. Pay attention to what he's saying, because if you're holding on to silver, you're going to appreciate what's going on. Just because our government is trying to hold it down, just because they put a cap on this, that don't mean squat. The demand for silver has never been higher, and they don't have a way to cover the demands. So as they continue to do what they can to manipulate the prices, the reality is people like us who buy silver and continue to do so are really starting to expose the corruption involved in precious metals markets. It says conquering silver market manipulation. Here we go. Across the world, frustration is growing amongst the silver market participants, resulting of the price action over the past 2 years between 2020 and 2022, where we are now. During this period, extraordinary monetary and physical stimulus in response to the Rona pandemic, supply chain disruptions, as well as the Russia-Ukraine war has resulted in explosive, multi-decade record levels of official rates of inflation, leading to many economies experiencing stagflation. This is normally when you start to see people run over to safe havens and the value of gold and silver go up. It says, as a result, the prices of commodity, real estates, public listed shares, and cryptocurrencies have seen significant increases consistent with the wealth effect, although these assets have witnessed a dramatic pullback during the April-May of 2022 as major central banks, such as the U.S. Federal Reserve, have begun to tighten monetary policies through the lifting of official interest rates, which is normally what happens, but after a while, the gold and silver tend to boomerang and start to go back up. It says, however, during the same period, the price of silver has been effectively capped at $30 per troy ounce, primarily trading between $22 and $28 per troy ounce, as shown below in the diagram. Specifically, since the commencement of the Rona pandemic, where the price of silver reached as low as $11.63 per troy ounce, which was March 16th in 2020. I remember that happened. I told people, don't panic, buy now. It's going to go back up. And sure enough, it did. A lot of us bought during that time. A big chunk of my silver was bought when it was right around $11. Silver has only approached the $30 per ounce on two occasions, that being the $29.63 on the 3rd of August 2020 and $30.09 in February 1 of 2021. You can see here in March 2020 when the Rona first broke out, and then look at it shoot up here, and there's been price suppression ever since. Given the current macroeconomic context, geopolitical condition, and the price action experienced in non-precious metals commodities, there are a lot of experts out there saying, look, there's obviously manipulation going on, and they're not even hiding it. These criminals are just doing it out in the open. There's no sense in them hiding it. They don't have to, because they are working with the government, who's actually complicit and part of this criminality. So the silver price action during 2020 and 2022 strongly suggests prima facie evidence of market manipulation. Importantly, the new evidence added to the body of market manipulation evidence, as outlined in January 2020 article, the undeniable manipulation of the silver market, and the May 2020 article, Rona exposes gold and silver price manipulation. The sad part is those people that we put in charge to oversee to make sure that this doesn't happen are actually taking part actively in the manipulation. Specifically, the former article points out that the key fact that silver has yet to surpass its January 1980 high expressed in Australian dollar terms, even though Australia has witnessed an explosion in its money supply from January 1980 to December 2019 by approximately 2,600%, while the above ground stockpile of silver grew by just 94.2% over the same period. Obviously, there's something wrong. You have to revalue gold and silver to keep up with the money supply. This is why we look at the debt clock. This gives us an idea of where the value of gold and silver should be per ounce based on our money supply. And now that's even being manipulated. Somebody found some serious manipulation in a debt clock. It's terrible. Importantly, real-world examples exist which strongly suggested that manipulation of the silver market occurs across the entire supply chain and pricing structure, including the physical market, wholesale market, major institutional holdings such as central banks, the Bank of England, as well as the retail market, the over-the-counter, which is the OTC markets, London, United Kingdom, and the future derivatives exchanges, the COMEX of the United States. A diagramical illustration of silver markets, which encompasses both the physical market and the pricing structure, is demonstrated in the diagram down below, which is here. I'll leave a link so you can come to this article and check out the diagram yourself. Such real-world examples of manipulation in precious metals markets include a settlement of class action lawsuit back in December 2021 to the tune of $152 million by multiple financial institutions, including the Barclays Bank, Scotia Bank, London Gold Market Fixing, Ltd., to end claims that they illegally fixed prices on the gold markets, noting that Deutsche Bank and HSBC settled similar claims in 2016. But here's the thing, the fines that these people pay are no big deal. We'll come down here. You can see JP Morgan found guilty and fined $920 million in 2020 by the Department of Justice for manipulating precious metals markets via the practice of spoofing. Who cares? The 920 million, they make that in 2 days, spoofing the metals, and they continue to spoof today. So it did nothing to deter them from doing it. What you do is you take away all the metals that they own, take away their license to practice, close them down as a business. That's what you should be doing, and go after the bankers and charge them and throw them in jail. Unfortunately, our bankers have become so rich and powerful that they actually control most all of our politicians. Morgan Stanley settling a $4.4 million class action suit in 2007 for failure to purchase and store physical silver on behalf of investment clients. In other words, it has lied, saying that you're buying into these pools of silver and they never had the silver. They just took their money. Market manipulation, emphasis, and analysis. Within the English-speaking world, discussions and analysis of precious metals market manipulation is dominated particularly by American and Canadian analysts. These analysts tend to place significant emphasis on the futures market, i.e., the COMEX and its regulator, the Commodities Futures Trading Commission, the CFTC, at the expense of focusing on manipulation practices within the physical market. These very people here, and you hear Chris Marcus ripping at these guys all the time. He gave them undeniable evidence of the market manipulation in which he should be rewarded once the CTFC does their job, except for, unfortunately, the guy that's in charge of the CTFC has actually and actively taken part in part of the manipulation. So the very people we put there to protect us are actually a group of criminals that are there against our interests. Such overemphasis is understandable given that the COMEX and the CFTC are American institutions and some COMEX data is made public, whereas there is a little available data of physical OTC trading and storing ETFs, pools, certificates. Nevertheless, manipulation within the physical market, which includes fundamental fractional reserves, rehypothecation schemes, including lease and swaps, are of critical and material importance. The market effect of such schemes is to artificially expand the supply of silver and thus contribute to price suppression. Moreover, at the heart of these physical market manipulation schemes are a lack of integrity in product quality, fake or diluted bars, bullion bars, which are not at least 99.9% pure. Imagine our government taking part in lying about our silver. They've been caught. China's been exposed for that as well. Storage custodian services, which include unallocated and pool allocated products, and audit quality. Traditional precious metals analytical model. Importantly, the existence of multiple forms of market manipulation render the conventional forms of precious metals analysis redundant. For the overwhelmingly majority of economically trained analysts, precious metals analysts proceeds according to the following phases. So in phase 1, you have central banks print fiat currency, either physical or digital units of currency. This leads to inflation and currency devaluation, which we're experiencing now. That's why they keep talking about how strong the dollar is, but meanwhile, we got inflation out the ass. So how the hell is the dollar strong? They're just lying to you. This leads to economic agents shifting capital from fiat currency to assets which act as a store of value, primarily precious metals, not cryptocurrencies. Phase 4, the shift of capital generates additional investment demand for precious metals, and Phase 5, additional investment demand drives the price of precious metals higher, ceteris paribus, i.e., all other things remaining equal. In particular, this investment demand price driven model, as described above, has been promoted aggressively by precious metals, including silver market commentators, analysts, or alternative platforms such as YouTube, and particularly by those who are linked to retail bullion dealerships and other related precious metals businesses, including financial institutions who offer precious metals related investment vehicles. These analysts have an inherent conflict of interest given that investment demand price driven models encourages bullion sales as investors believe that their purchase contributes to the investment demand and ultimately higher prices. and they typically draw remuneration via commissions on bullion sales. Nevertheless, to test whether this model reflects real-world events within the silver market, both the price behavior as well as data from the physical market need to be considered. Market data from silver institutions, as shown in Table 1 below, demonstrates that industrial silver demand was the highest on record in 2021 with 508.2 million troy ounces and is projected to reach a new high this year at 539.6 million troy ounces. Retail silver investors' demand in the form of bars and coins in 2021, which was 278.7 million troy ounces, and forecasted for this year, 2022, to be at 279.2 million troy ounces, are the highest since 2015. So the demand is there. We're driving up the demand. We got to just keep doing what we're doing, by the way. It's going to catch up to them. While net investment demands via exchange traded products, ETPs, reach a record in 2020 at 331.1 million troy ounces, net ETP demand in 2021 and forecasted for 2022 remain positive net inflows at 64.9 and 25 million troy ounces respectively, although slowing. So people don't get frustrated with the price manipulation. We know it's manipulated. We do, but the pressure is being felt on their end. Try as they may to put a cap on silver. Like I said, it's like holding a beach ball in the water. Eventually it's going to pop up. You should be looking at this time as the ultimate opportunity to store up on your precious metals. The global physical market experienced a net neutral market balance deficit in consecutive years of 2019, which was deficit by 63.4 million troy ounces. In 2020, it was deficit 258.1 million troy ounces. In 2021, it was deficit 116.7 million troy ounces and is projected to experience yet another net neutral deficit this year of 96.5 million troy ounces when factoring in all forms of industrial and investment, retail, and ETP demand. Remember, I brought up that every year, to cover all the demands needed of silver, there has to be approximately 1 billion ounces mined every year. But that has not been the case. They have not been able to keep up on global demand. So every year we're running a deficit. So the more we out here buy physical gold and silver, we contribute to this deficit. And you got to keep in mind that they want us to go into this Green New Deal. It's kind of hard to do that. And this affects the technology sectors because there's not enough silver. So they can try to manipulate this all they want. Eventually, they're going to have to be accountable for what happened because it's going to boomerang and bite them right in the butt. So these facts paint a strong fundamental picture for why the price of silver should have risen over 2020 and 2022, consistent with other commodities such as base metals, energy, and agricultural goods. However, when considering both data from the Silver Institute and the silver price behavior of 2020 and 2022, the conventional model of precious metals markets analysis from both a broader macroeconomic as well as a microeconomic market perspective does not reflect real-world events, meaning that increased silver demand during an inflationary period does not necessarily lead to a higher silver price. Thus, an alternative explanation of how the silver market operates is now required. In other words, it should have drove the value of gold and silver higher. So there's an alternative market thesis. Well, as noted above, fraudulent derivative trading practices such as spoofing does exist and can play a significant role in how price is manipulated via the comics, fractional reserves, and rehypothecation via lease swaps. Schemes that materially distort the real state of the physical market also play a significant role. In contrast with the traditional 5 phases, which we talked about up above, analytical model outlined above, major systematic fraud in the physical market result in investment demand having little influence on market price. For example, if an additional 1 billion of investment demand for physical gold entered the market, But this investment was not actually backed by physical silver, even if the investor believed it to be. Then this flow of fiat currency capital would have little to no effect on market price, as supply is assumed to have, in effect, automatically and equally responded, regardless if true or not, and without the credible threat of objective oversight, audit, and penalty by independent authorities. Again, the people that we put there in charge to make sure they don't manipulate the markets are actively manipulating the markets. Basically, you put the wolves in to guard the chickens. Thus, a reasonable alternative explanation regarding the dynamics of the silver market suggests that the silver price is driven more by investment supply, i.e., real changes in supplies, and not so much in investment demand or the extent to which investment demand is actually backed by physical silver bullion. In the most extreme case, finite fractional reserve supply, i.e., supply of silver bullion, which physically doesn't exist, renders investment demands completely irrelevant as a price influencer. They're just lying to us about the amount of physical silver that's out there. A new approach to rectifying silver market manipulation. If systematic manipulation of the silver market is acknowledged, which it is, both within the derivatives and physical markets, the question then becomes, what is the appropriate mechanism in order to best address this manipulation and restore the markets back to its neutral demand and supply forces? Unfortunately, given the inherent political and legal difficulties of seeking redress in countries such as the United States and the United Kingdom, given the potential involvement of both governments in precious metals market manipulation. You see what I mean? How can we turn to our politicians to do something about this when they are part of the criminality? Retail investors, analysts, and commentators have little prospect of overcoming institutional resistance and market inertia in Washington, D.C., with both organizations, the CFTC and the DOJ, we have found over time have become compromised. They become politically active. Therefore, you can't rely on them. They're corrupt. The New York Comics, which is part of the corruption, London OTC market, and the Bank of England, all part of this criminality. Says thus, there is little hope that market manipulation can be tackled by attempting to expose and end the corrupt market practices at the future derivatives market, i.e., the comics, by market participants such as the bullion banks, those regulators who are charged with governing them, such as the CFTC, the top down approach. Rather, the only available strategy to address manipulation of the silver market is through a bottom-up approach that seeks to address instances of fraud and rehypothecation in the physical market. This includes unallocated and pool allocated schemes offered within the retail market to retail investors, e.g., the Perth Mint, which is what John Adams did a great job of exposing. Exposure and rectification of such fraud and rehypothecation will shrink supply from the market understood quantity of supply to the actual quantity of supply. Importantly, there is a reasonable grounds to assume that there are sufficient levels of fraud and rehypothecation within the physical silver market to have a material impact on function of the silver market and thus the silver price set by the comics and the OTC market. Addressing physical market fraud and rehypothecation schemes will ultimately put pressure on the OTC market and the futures exchanges and will ultimately drive price higher when major markets and exchanges get rated for physical silver in similar fashion to what happened to nickel at the London metals market in March of 2022. Remember that? The price of metal shot way up. The same thing could happen to silver. Ideally, what is required is exposure of a sizable fraud and rehypothecation scheme in the physical silver market to cause a sufficient number of market participants to trigger a rush on redemptions, which would expose other similar schemes across the world. Such an event would likely guarantee the price of silver would break through the current $30 per troy ounce ceiling towards the upside. So what is John's conclusion? From all the objective evidence available, it is now quite obvious that the price behavior within the silver market over the past 2 years makes little market or economic sense. Instead, market manipulation offers a more compelling explanation. Despite historic attempts to address such manipulation, all previous attempts, especially those involving large financial institutions, i.e., the bullion banks, have either failed or resulted in cash settlements with no admission of wrongdoing, thus providing little incentive for market participants to alter their behavior. Rather, in order to effectively address market manipulation, what is required is a paradigm shift in approach and execution. This article argues the only salvation for silver investors is to expose fraud and rehypothecation schemes within the physical market, which in turn exerts pressure on the derivative exchange via bottom-up approach. Exposure of significantly large schemes that prove scandalous is likely to trigger an international chain reaction that expedites the process of squeezing the derivatives futures markets and manifesting in a higher, less manipulated silver price. I would love to see if there's a way that we could come together in the silver market or in the precious metals market. I'd like to see Chris talk to John Adams and say, hey, what is the plan? Can we come up with a plan together with Andy Shipman and all them other people? Everybody else, get together, come up with a plan and implement it. When we did the silver squeeze, it worked. It was effective. They lied and they manipulated the markets. But if we continue to do that, we can't affect change. So I'll reach out to Chris Marcus and say, hey, is there a plan? Is there something we can do to make this happen and see what we can come up with? People ask me if the silver squeeze is still going. It actually has been going since it first started. It's just not talked about as much. Man, I would love to have a life-size statue like that made of silver. That would just be awesome. Anyways, you guys don't give up. Just keep buying silver every chance you get. As far as cryptocurrencies are concerned, yeah, buy at your own risk. They can manipulate both markets, but there is a bigger thing going on with cryptos. I don't like the more I read, the more I'm starting to realize how big of a scheme they are. But having said that, there are opportunities to make money. And once you make that money, my suggestion be that you grab your profits, turn around, and invest it into precious metals. Anyways, that's it for now, you guys. Do me a favor, hit the thumbs up button. If you're not a subscriber, please do so. Because when you do, it helps out the channel, and I surely do appreciate it. And I'll catch you later. I'm out.